This is the Cash Value Solutions Podcast, where your hosts, Jason Pohlmeyer and Kyle Mann, shed light on little-known money truths to help you take control of your financial future and become your own banker. Subscribe, rate, and review the show, and check us out at cashvaluesolutions.com.
Hey everyone, welcome back to the Cash Value Solutions Podcast this week. What are we going to talk about with everybody today, Kyle?
We're going to kind of explain the difference between like just getting a whole life insurance policy. High cash value life insurance policy is not the same as infinite banking.
Why are we going to talk about this?
Because we've come across this a lot with potential clients and just other people we've talked to. They're not seeing it as separate things. They're kind of looking at the policy, number one, as the total, as the thing that matters the most. The design, the rate of return, they're very important, but it's not the idea of infinite banking.
Yeah, literally all the focus of the conversation will be on the policy. Almost nothing to nothing is spent talking about infinite banking.
Mm-hmm.
And okay, I just want to preface it with this. If people want a high cash value life insurance policy, and that's all that they're interested in, we have no problem writing that for you.
Mm-hmm.
But just understand that is not infinite banking. They're associated with each other, but doing one is not exclusive of the other. And
it's also like if you're just relying on that illustration and that awesome rate of return that it looks like, you must know that illustration is not going to be exactly what.
It's purely an illustration.
No, and it's based on today.
And just because these were questions that I have, okay? So let's say a company has a dividend rate this year when you get a policy. The next year, when your policy anniversary comes around, the dividend rate hasn't changed. Is the dividend going to match? In my experience, yes.
Mm-hmm.
If it illustrated one way and you paid the premium as we illustrated, the company's dividend rate doesn't change, you receive that dividend.
Yes.
Okay? So that's not what we're talking about. What we're talking about is dividend rates go up and down with companies. Honestly, they've gone down for a long time now because of the low interest rate environment that we're in. Okay, so that's what we're talking about. And also, an illustration really is just an illustration because we're using this to try and show you guys how this policy is functioning.
Mm-hmm.
Odds are over 30 or 40 years. I have a policy myself that's designed to take premium for over 40 years. Odds are I'm not going to follow that exact plan for 40 years.
Yeah.
Okay?
And that illustration is not going to look the same in 40 years.
Exactly. So just realize that it is an illustration. And when you start comparing these things between companies, yes, some companies, it looks better, tremendously better.
Mm-hmm.
And I have no problem going with that company. But just realize that these things change and it will not always be the same. We can't just pick the winner, the best policy at the time that, you need to use it. We just can't do that.
No.
And we can look at illustrations, but we don't know who has the best policy for your entire life.
And these companies take turns of like being the best for like cash returns. Like the one that's the best right now is not going to be the same in 10 years, more than likely, because that's how it's always been. They've changed, things change in the companies, things like that. So it's impossible to predict which one is going to give you the best overall returns throughout your life. The best we can do is design it to your needs and then also use the company that fits your needs best, because all these companies offer different things in terms of flexibility, like when you can pay, some of them may offer more death benefit per dollar.
Some companies offer more cash value, higher guarantees than others.
Yeah.
Some companies, as a result of that, they have much quicker break evens than others. I mean, there's just a multitude of different things, but the point we're trying to make is you can't just know the winner for your lifetime just by looking at an illustration, because things will change.
Absolutely, yeah.
But to get back now to the purchasing a high cash value life insurance policy is not the same as doing infinite banking. I mean, just a really specific example, because this happened very recently with us. Somebody comes to us very interested, talked to some other practitioners, didn't get along with them. That's fine. We're not even going to ask who it is. That's fine. But then, we start working with them, and we can kind of see why they might not have got along with the other practitioners.
Mm-hmm.
They're, putting things into Excel and trying to compare which company is going to be better under this loan scenario and that loan scenario. I mean,
Waste of time.
yeah, it's not what infinite banking is. If you want a high cash value life insurance policy, yes, we can absolutely do that. But realize it is not what infinite banking is. And to try and compare companies across Excel, I mean, talk about a nightmare.
And it's impossible. It's a waste of time. Like things can change, in the blink of an eye. I mean, most insurance companies are coming out with new products this year with the new 7702 change. So how can you account for that when not all the companies have released what these new products are going to do? You don't know. You can look at the history and just know that over time, everything's going to be pretty darn close.
Absolutely. And you're going to receive a lot of benefit from the policy.
Yes. And I know we've said we don't want this to be a cop out for a crappy policy, because there's no reason to get a crappy policy in 2021. There's no reason to get a policy that doesn't break even, or that takes 15 years to break even for most, unless you're rated. I mean, then it might be a little different story. But just know and make sure you're working with somebody who knows what they're doing too. That's a whole nother issue.
Yeah. Like Kyle said, this is not a cop-out. This is just to differentiate so you understand that infinite banking it's a mindset. It really is. It's a mindset of how to use the life insurance policy.
Mm-hmm.
Okay? The life insurance policy is the tool. You can have the tool without the mindset.
Absolutely. And we're going to have a podcast coming out that talks about well-known people who use their policies to start businesses that produced, become over $1 billion businesses. That rate of return did not matter in that situation. So, and I'm sure that policy, started way back then. I'm sure, it looked great. It worked great. But the whole focus was what they did with that policy. And they weren't even taught infinite banking.
It was the mindset that they applied to having that.
Yeah. Like, I have access to capital here, so I will take that capital and then start this business
because I have an opportunity in front of me.
Yes. Then cash flow comes, and then who cares? I mean, yeah.
Yeah. Like we've written about it. We've talked about it. Ultimately, the external rate of return is something that you can't put on paper. It's going to be very high.
Mm-hmm.
I shouldn't say it's going to be. If you're educating yourself and applying yourself, it has the potential to be very high. In the policy, Kyle and I, we can't control interest rates. You can't control interest rates. The insurance company can't control interest rates. It's going to be what it's going to be. Can it be designed properly to accumulate cash value better? Yes. But ultimately, you and I and the insurance companies cannot control what the interest rate environment is.
No.
Would I love my policy to produce 8% every year? Yes. Is it? Not even close.
Mm-hmm.
Not even close.
And you can also, if you haven't listened to our old policy review that we did, a podcast episode about, it was a small policy, but man, look at that perform from the 60s till now through all sorts of war, economic, depressions, things like that. I mean, it stood the test of time.
It absolutely did.
And it was not properly designed. It was just standard whole life.
And you know what? I bet that person wishes that they could have paid a lot more into that policy now.
Oh, yeah. Definitely.
Hindsight's 20/20, though. Think of how simple that was. that policy we're referencing, it right now it's a little over a 6% rate of return, actual rate of return, like what they have received on cash they've put into it. I mean, that there was nothing, they had no taxes they had to pay for the gain on this. There is no like tax planning for the future because of this. It's just pay the premiums every year. You get an annual statement. You see how much money you have access to, what your premium is for the next year,
What your death benefit is.
what your death benefit is, who your beneficiaries are, and that's it.
And no
It's
stress.
simple.
Yeah, no stress of what happens outside, like any sort of political events that tank markets or cause disruptions. It doesn't matter.
The stock market went down. Oh, guess what? This life insurance policy did not go down in cash value.
It went up again.
It went up again today.
So,
You can actually watch that stuff on your client portals now with some companies.
yeah.
If you really want to.
So, yeah, you need to define what your goal is. Is your goal to have a high cash value life insurance policy that you're just parking capital in? You don't have plans of using it. The death benefit protection is nice. Or is it something that you want to use to fund and create opportunities?
Mm-hmm. Ultimately, it comes down to that. We can help you with either one. Just understand, like we said in the beginning, a high cash value life insurance policy, just because you purchase one, does not mean you're practicing infinite banking.
And it doesn't mean it's wrong either if you just want a high cash value life
No.
insurance. I mean, we're not saying that, oh, well, that's stupid to just want that and not want to do infinite banking. I mean, I think the idea and how IBC works I think it's a lot
I think it
more.
enhances
Absolutely.
the tool,
That's
the life
good.
insurance policy.
Definitely.
But
But
the tool isn't broken or need fixed because you don't have that mindset
no.
to use with it. I mean, it is a good product.
And if you want to see spreadsheets and stuff, I mean, there's plenty of that stuff on YouTube, but that's something that, like, if that's what you want, like, that's not something we do.
Yeah, that's not the mindset that we are. I mean, if you want to compare 10 different companies, honestly, we're not the right fit for you.
No. And we will, if you guys want to see, like, the companies that we write with, we have no problem of showing you illustrations and going through, the pros and cons of each company, because everybody's a little different. But in the end,
you deserve to have that knowledge.
you deserve to have the choice. Yes. I mean, if we can show you different companies, tell you what's good, tell you what's not so good or whatever, and then you can make the final decision, that's empowering you to become your own banker.
Absolutely. I love how you said that, Kyle.
So,
And I don't really have anything else to add to this. I mean, I think that we've made our point here, and people can do with it as they want now.
Yeah, so appreciate you guys tuning in the show again this week, and we'll be back next week with a new episode.
All right. Thanks, guys.
This was the Cash Value Solutions Podcast. Remember to subscribe, rate, and review the show. Check us out at cashvaluesolutions.com. And don't forget to tune in next week.